Bill, I'm curious, which is the first metric you look at? Is it that better same-store sales growth or the 37% e-commerce growth to show what Walmart is actually doing?
Well, I think it's the same-store sales growth, which has been really impressive. And the 37% e-commerce growth is part of the same-store sales growth, so you get to look at both of them at the same time. The team in the U.S. is just doing a terrific job right now. And I think that mirrors the state of the U.S. consumer, which is also, doing very well, and consumption remains strong.
So 37% e-commerce growth is obviously a very, very strong number. Is it strong enough, though, to compete with Amazon? It does mark a little bit of a slowdown from last quarter.
Yeah, it does. No, I think it's strong enough. And again, keep in mind that Walmart's strategy is this integration of the physical and the digital world, and the growth that they're showing in e-commerce is bolstered in a way delivered by their physical platform. And so I think it's been pretty impressive. They've sort of declared what their strategy was, and they're doing a good job executing against it.
And then just before earnings, they beat Amazon to the punch with that next-day delivery service. How much of a difference do you think that'll make to customers?
Well, I think it's big for customers. I think the question that both Walmart and Amazon have to answer is at what cost, and how is that going to impact their bottom line. I think one of the things that I still am concerned about at Walmart is their operating income, which was better than they thought it was going to be, but it's still negative. And if you sort of look at the operating income history over the last 3 or 4 years, it's gone down from about $29 billion annually to $20. And so the strategy that they've declared, they're executing, but it has been at a very steep price. And as you sort of progress towards next day and then same day, the cost is just tremendous. And at what point is enough?
Hey, Bill, are we just going to have to get used to the idea that ticket's going to drive this rather than traffic over time? I mean that for Walmart and retailers in general.
Well, I think it ebbs and flows, and right now I think Walmart has shown a really decent balance between ticket and traffic, but that's not the trend in the market. And I think what you'll see is a period where consumption, quantities level. You have a whole bunch more competitors. The e-commerce transactions aren't really recorded the same way that the physical transactions are. And so it's a little bit complicated. I think you'll see an ebb and flow, and I think you really need to look at the balance of both. And same-store sales, as long as it's not price-driven, and you got to look at gross margin for that as a comparison. As long as it's mix-driven, I'm fine with a more moderate ticket growth. Transaction growth.
Right. And speaking of margins, how much liability lies in a trend toward higher labor costs and a trend toward more online mix? Does that mean that the liability to margins overall is increased over time?
Yeah, I think that's what you're going to see is pressure on margins and correspondingly operating income, because the margin mix, that you're going to, or the margin rate you're going to be able to show with the same day or next day shipping is just going to put a tremendous amount of pressure. At the same time, rising wages are going to put a pressure on operating expenses, and that's what's shrinking, the incredible shrinking operating profit.
Bill, given your experience just in general with the consumer, what are your expectations overall, given that prices are going to go up, certainly for anything coming from China, and conceivably on everything coming from China? Do you think people are going to pull back?
I don't. I think right now the consumer is strong and will remain strong. Wages, employment, gas prices are really the three leading indicators for consumer strength that I look at, and all those seem stable for the time being. Prices are going to go up. I'm still optimistic about a deal being done with China, so hopefully that happens. But in the event that it does, the question is really how much is going to get passed through. Don't forget that retailers particularly were big beneficiaries of the corporate tax cut just by the nature of the way their P&L's set. Walmart, for example, I think their effective tax rate went from about 33 down to 19. So they got a couple of $1 billion sitting around in the P&L that they've been investing and growing their business that And Walmart and other retailers, every retailer will look at the cost increases, figure out how much they can pass through, figure out how much they can mitigate by moving the production source, and then that what's left over will impact the consumer. And I don't know that that'll be as big as, I hope it won't be as big as we think it will be.
So I guess the question, speaking of a couple $1 billion, I mean, currency was no joke for this company this quarter, shaved about $2 billion off of top line growth. Which is the bigger threat, the strong dollar or the trade fight and tariffs?
Well, I think it's a balance of both. I think you look at Walmart's international results, and even with the currency adjustments, sales weren't particularly great. The impact, I think that's where the impact of the Flipkart loss, which might be bigger than they'd anticipated, showed. So they had a pretty dramatic operating income drop in the international segment. I think currency, the strong dollar, is going to really be a challenge for companies like Walmart with a large non-U.S. business. But it's a benefit for the U.S. segment, as you saw there as well.
Bill, finally, I got to ask you honestly about your optimism about a trade deal with China. And I wonder if you're moved by comments by people like Steve Bannon, who argue it's not about getting a deal done anymore. It's about disentangling the China-U.S. relationship, full stop.
Yeah, well, look, I think that might be part of the negotiation. But the reality is, if you look at it at its base form, China needs a deal really bad, and the U.S. needs a deal, maybe really bad, but maybe not as badly as China. And so when you have two sides that are really motivated and really need a deal, I think one gets done. The problem is that a typical deal, and the president's experience at these big deals have been in private with discussions, over a couple of months or years to get a good deal done. And that this brinksmanship that happens in almost every deal, I'm going to walk away, this deal's not good enough. It happens in every deal I've ever been involved in. It just doesn't happen on the front page of every newspaper and every media outlet in the world, which makes it more difficult. And at the same time, the president has his detractors here who are saying, indicating that he may not be around in a couple of years or even a couple of months, depending on who you listen to. It's difficult to negotiate the deal that needs to be done. So it's complicated, but I go back to my optimism is based on this notion that China needs a deal and we need a deal.